So we'll first look into first what are the provisions relating to partnership firm. So a lot of questions do come in the examination on partnership firm. So though the most preferred choice is business income with companies, which is the most preferred choice. But second best preferred is the problems in business income with partnership firm as a base. Though the provisions are same, because all the provisions are going to be there, but there are special provisions which are there in various chapters uh, in the entire income tax act for the partnership firm. So which are there in various chapters, section 184 to 189 in chapter 16 of the income tax act, section 40b which deals with disallowance for interest remuneration of a partnership firm in chapter 40. And you also have section 78, chapter 6 deals with set off and carry forward of losses. So where you have section 78 is exclusively applicable for a partnership firm. And also you have chapter 12BA, so where section 115 JC to 115 JF, just like as a concept of minimum alternate tax. Possibly some of you would have heard about the concept of MAT for a company. A similar tax is there, although not exactly. We also have a tax called alternate minimum tax, provisions of which are there in section 115 JC to 115 JF of the Income Tax Act. So we have 184 to 189 from chapter 16, section 40B, chapter 4B, section 78, chapter 6, which is set off and carry losses, and chapter 12BA for alternate minimum tax as against minimum alternate tax, which is called as a alternate minimum tax. So, I will just go through each of these provisions in the subsequent slides. First, what are the provisions relating to firm in the chapter 16, which are 184 to 189. So, first we'll look into what are the various sections dealing with in chapter 16 relating to the firm. Now, section 184 talks about what are the conditions to be satisfied by a partnership. So, conditions to be satisfied by a partnership firm is given in section 184. So, what if those conditions are not satisfied is dealt with the section 185. I say there are certain conditions you have to satisfy as a partnership firm. If you don't satisfy, there should be consequences. If there is no consequences, then nobody will follow the conditions. So therefore, it's very important whenever some conditions are legislated, this conditions violation should have a consequence. So that is dealt with by section 185. Section 186 is not there, it's omitted. Section 187 deals with change in the constitution of the firm. Section 187 deals with the change in the constitution of it. It tries to explain two things in section 187. It talks about what is the change, what is the meaning of the change in the constitution of the firm, and it also talks about what are the implications of the change. Both are dealt with section 187. So what is the meaning of change and how that will impact the assessment of the firm. Now, section 188 talks about a situation of a succession of one firm by another. So if a firm is succeeded by another firm, so how in those circumstances assessment has to be made. That is dealt with by section 188 of the Income Tax Act. Section 188A talks about the joint and several liability of the partners. So section 188 talks about joint and several. Already you will be aware of one of the problems of a partnership firm is the unlimited liability. So 188 talks about what is this joint and several liability of the partners, what is the scope of liability of them. And last but not least, section 189 talks about so how to make assessment of a dissolved or a discontinued firm. So if the business of the firm is dissolved or discontinued, how to make the assessment is dealt with section 189 of the Income Tax Act. This is the sequence of the sections from in chapter 16, 184, 185, 187, 188, 188, 189. 186 has been long back omitted. My suggestion to all of you is that at least up to business income, there is a possibility of you having already read in your intermediate. We are only trying to do some advanced version of business income. As far as chapter 16 is concerned, it is not there in the intermediate. This is the first time it is there for you in the final. Feel free. So just whenever you have a doubt, always feel free to ask any questions on this. Unless you handle this practically, maybe sometimes it's all completely new to you, and most of you may not have an experience of handling this practically also. So therefore, whenever you have a doubt, feel free to ask any question for this. Because assessment of firms, see, our experience in the examinations is somewhere the students are giving impression as if it is something Greek and Latin. Uh, Absolutely, they seem to be. Uh, they just give an impression they have not even gone through this revision once. So that's why you gotta be careful. Not a difficult provisions. It's much easier than most of the provisions. Only thing is just like people are not studying and they're just trying to make some guesswork. And this being a first time, feel free. Don't worry about it. Even if it takes 5-10 minutes extra or 1 or 2 sessions extra, not a problem. In any case, examination has been effort, not an issue. So we'll first go to 184 now. What are the conditions to be satisfied for a firm? It will be very interesting. Under the partnership act, so here you can also have an oral partnership. So income tax act says your partnership firm must be evidenced by instrument. That means what they are trying to say is that there must be a partnership deed. You must have a partnership deed. So there is no question of oral partnership in income tax. Second point, in the case of a partnership firm, you would have read in your 11th standard onwards, if share of profit is not specified, then in those circumstances, partnership act, the partners will be deemed to be sharing profits or losses equally. Whereas in income tax, they specify that the shares of the partners must be specified. That means you have to specify what is the profit sharing ratio of each of the partners. So we had one very interesting issue. One of the partnership firm, it's a company secretary firm, uh, drafted a partnership deed, and it was going on for the last 1 year before the senior partner, the company secretary firm, just wanted to review the partnership deed. Uh, the only problem is they have admitted to company recently qualified company secretaries as a partner, and they want him to get only a fixed salary. They don't want to give a share of profits, though they are partners of the firm also. So his issue was very simple. Now, in this particular case, if I don't specify the share, I will not be satisfying 184. What should I do? So now in this particular case, what you must understand, the section only says shares of the partners must be specified. Nowhere in the act it says the shares of the partners must be specified as a percentage of profits. Not there at all. Therefore, I suggested simple. Don't worry. Partner of mentioned in two, because you will have in the first one overall the partners. He will entitle to a share of profit of 1 rupee, 10 rupees, 100 rupees, whatever it is. You want to give any amount you give, or 101 rupees if you're sentimental. So you can specify for the new partners who don't want them to share the profits a particular amount, which could be 1 rupee, it could be 10 rupees. Law does not say anything. You can even say a share of profit zero. What do you think what the section says? The shares of the partners must be specified. You can specify partner 2, partner 3 will get profit share of 0, 1, 10, 100, anything you specify. It is not necessary that the shares of the partners must be specified as a percentage. How does the income tax department know that you have an instrument, that is, you have a deed? And how does the income tax department know that the share of profit is specified? So, therefore, the next condition section you can easily anticipate. You can easily anticipate what could be the next condition. Certified copy of the partnership deed, except minor, should be furnished along with the written off income of the previous year in respect of the assessment of the firm is first sought. Now, the section is not saying the first year of formation of the firm. It only says first year in which you are seeking assessment. In that year, you must submit a copy of the partnership deed. Unfortunately, one practical challenge most of you possibly will be facing or will be thinking about this particular point. Is there any scope for uploading this particular document in the e-filing site? Unfortunately, that is not there. Therefore, my suggestion in those circumstances is always when you don't have this, file physical copy in the TAPA. That's all. So you just simply have to file that around in the physical copy. You just file. Uh, though the courts are taking a stand, this is only a procedural requirement, but that is one way of coming out of this. Right. So whenever there is a change in the constitution of the firm, you have to certified copy of the revised partnership deed should be furnished if the change had taken place in the previous year. So whenever there is a change in the constitution of the firm, furnish a revised partnership bill. What is very important is in both third bullet point and the fourth bullet point, I given certified copy. There was one particular case where one of my friend chartered accountant gave a partnership deed signed by only the managing partner. So I just told him, boss, be careful, don't give this because the law is very clear. Except minor, all the partners should sign the partnership deed. It's not only the managing partner. Whatever certificate copy you are giving to the income tax department, that must be certified by all partners except minor. So both in bullet point number 3 and in bullet point number 4, signature of all the partners of the firm should be obtained unless the partner is a minor. So four conditions we're talking about before we go to the one last condition. Evidenced by an instrument, that means you must have a partnership deed. You must specify the profit sharing ratio. Profit sharing ratio is need not have to be as a percentage. Even as you can see from the slide, it's not saying share of partners specified. They don't say profit sharing ratio must be specified. Shares of the partners. That's all. And submit the copy of the partnership deed for the first time you seek assessment, and whenever you revise the partnership on account of the change in the constitution of the firm. So last point deals with what will happen in case of a dissolution of the firm. If after the dissolution of the firm, if return is going to be made by the firm, then it must be signed by all the partners who are partners at the time of dissolution. And if the dissolution is caused on account of death of the partner, then the legal representative of the deceased partner must also sign. So one of the reasons for dissolution of the firm is unless the deed specifically provides for continuation of the firm, unless the deed provides for continuation of the firm in the event of death of the partner, death of the partner as per section 42 of the Indian Partnership Act automatically leads to dissolution of the firm. Automatic. So you must have a specific clause in the partnership deed. In those circumstances, and if you're filing the return after that date, then legal representative of the deceased partner should also sign the thing. So you should be also signing the return. That is what the section is talking about. I'll tell you what is the reason for this. You have to connect it to section 189 of the Income Tax Act to appreciate this particular point. So these are the conditions of 184. As at the time of starting, I said there are some conditions, and if you violate the condition, there must be a consequence. If there is no consequence, people are not going to be bothered about violating. So whenever a law says you have to follow certain rules, and if you don't have any fine or penalty for not following it, who will follow? So that's why section 185 deals with the consequences. The consequence of violation of section 184 is dealt with by section 185. So what section 185 says, in case if you don't comply those conditions, then interest and remuneration paid to the partners will be fully disallowed in the hands of the firm. So that means the consequences now is interest and remuneration is going to be fully disallowed. Under the provisions of Income Tax Act, some of you may be aware of this particular point. Partners are taxable in respect of interest remuneration under section 28(5) as a business income. Normally, interest is taxable as other sources, remuneration taxable as a salary. But in the case of a partnership firm, partners' interest and partners' remuneration will be taxed only under business income. But what is very important is the amount taxable in the hands of the partner will be there only to the extent it is allowed to the firm. That means unless the firm gets a reduction, partner will not be taxed. If the firm does not get the reduction, partner is not taxable. For example, take the case of interest, even though we'll go be seeing the subsequent slides. Interest up to 12% is allowed for the firm. If interest paid by the firm to the partner is 14%, firm will get only 12% action. Partner will also be taxed only to the extent of 12%. So this is one provision in the Income Tax Act where taxability depends on the allowability to the firm. If firm does not get the reduction, partner is not taxable. This is not the case for 48 and all. For example, assuming you work in my office, I pay you salary by cash. It will be disallowed to me, but you cannot go and tell the assessing officer, T. Suresh has already paid the tax, therefore I will not be taxable. It is not once expenditure is others' income and all is not there at all. My disallowance can also be your income. To that extent, law envisages double taxation. The only exception here is 40B 28(5) combination. Unless the firm gets a reduction, partner is not taxable. And 185 therefore makes it very clear. If you don't satisfy 184, I'm going to disallow the interest remuneration. But once interest remuneration is disallowed, partner will not be also taxable. So therefore, up to that extent, 185 itself provides for reducing the controversy. I've changed the slide, so therefore, even though it appears as if I've not changed, same point are also applicable in the case of left-hand side of the slide. If you see consequences of mandatory best judgment assessment in the hands of the firm. The consequence of 184 and consequence of mandatory best judgment assessment are same. And what does it mean? Even if the firm satisfies all the conditions of 184, the firm has got a deed, the firm profit sharing ratio is specified, copy of the deed is submitted, but the firm commits the failures specified in 144. Possibly just go back and let's try to revise assessment procedure now. We said best judgment assessment is possible on account of 144, on account of 145.3. 144 is called as a mandatory best judgment assessment, whereas 145.3 is called as a discretionary best judgment assessment. In 144, if I fail to file return of income under 139, if I fail to comply with 142 one notice, if I fail to comply with 143 to notice, and if I don't get the special audit done under 142A, then the assessing officer shall make the assessment to the best of his judgment. Before making the assessment of 144, the AO should give an opportunity of 1 year, and this opportunity is not required if there is a failure to comply with 142 one notice. Whereas 145.3 also says you can do best judgment assessment discretionarily. The assessing officer may, when no method of accounting is regularly followed, income computation disclosed not is not regularly followed, or the when your computation of income or the method of accounting employed by the SSC, in the opinion of assessing officer, is unlikely to reveal the correct income. In those circumstances, 145.3 allows the AO to do a discretionary best judgment assessment. Now, let us see the left-hand side of the slide. Consequences of mandatory best judgment assessment. So therefore, in case if 144 failure results in best judgment assessment, that is failure to complete 139, 142, 142, and 142A, then AO in those circumstances can disallow interest and remuneration even if 184 conditions are satisfied. That is 184.5. So what is 184.5 saying? Notwithstanding the foregoing provisions of this section, if there is a mandatory best judgment assessment, interest and remuneration can be disallowed. So two circumstances, one is best judgment assessment is done or 184 is not complied with, both have the same consequences. Firm will not get deduction for interest and remuneration. So how much interest it will get, how much remuneration will get, we'll see in the subsequent slides. We'll go through the provisions of 40B, which talks about limits and conditions for claiming interest and remuneration. That we will see subsequent slides. So again, if you look at 184, first point, evidence by instrument, profit sharing ratio must be specified, submit the copy of the partnership deed, submit the copy of the revised partnership deed whenever there is a change in the constitution of the firm. So therefore, at that point of time, your mind should process the question, what is the meaning of change in the constitution of the firm? Is the Income Tax Act defines what is the change in the constitution of the firm? Yes, it is defined by section 187 of the Income Tax Act. Now, section 187 of the Income Tax Act deals with the change in the constitution of the firm. If one or more partners cease to be partners, which could be on account of retirement, which could be on account of death, or one or more new partners are admitted, so there is an admission of partner. So therefore, a retirement or a death or admission will be considered as a change in the constitution of the firm, provided at least one partner before the change continues as a partner or partners after the change. Therefore, for the purpose of change in the constitution of the firm, what is really required here is one partner before the change should continue as a partner or partners after the change. That's all. Only admission, change now. Retirement will be a change provided. Retirement will be a change provided at least one partner continues. For example, there are three partners at the ABC. DEC admitted, ABC retired. So normally people try to put admission cum retirement deed. When you do this kind of an admission cum retirement, so what happens as a result? That all the older partners, none of them remain as a partner. So therefore, this will not be considered as a change in the constitution. 187 will not apply. So therefore, ensure at least one partner before the change continues. All the partners, second point, all the partners continue. That means there is no retirement or no admission, but profit sharing ratio of the partners have been changed. They are sharing equally. Now they change, say 5:3:2. Will this be considered as change? The answer is yes. All the partners continue with the change in their respective shares or shares. So what is the effect? If it satisfies the concept of change, then 184 says you should submit the revised partnership deed. What if you don't submit the revised partnership deed? Interest remuneration can be disallowed. How does the income tax department can capture this information? You are filling up the tax audit column. If you just recall, in tax audit report column, there is one question is asked, is there any change in the constitution of the firm? There you give yes or no. The moment you give yes there, just check, did you file a revised partnership? This is a common mistake we do. See, this is the one problem. Maybe some of you may be sometimes tired and sick of this point. I don't know why some people have to be tired and sick of this very important point. The income tax is something you cannot do this academically. The purpose of me doing this particular course, please understand, especially the final level, it has to have some correlation with the practical. If you're just going to use only for getting some 40, 50 marks, I think we are doing some grave injustice to this particular course. And we are considered as, along with the lawyers, pillars of the subject, pillars for the common man, just like what so many doctors are doing for the COVID. That's what we have been doing in the taxation field for so many years. And never ever underestimate our responsibility. All of you, everybody is there only for getting marks, but how you should get marks is very important. If you can compromise everything for getting marks, please go and do it. That's not my problem. But end of the day, we are doing some damage to the institution and the course. That's what all of you should understand. Such a very, very highly connected. All these partnership firms hugely depend on you because they cannot go for a full-time chartered accountant. Most of them does not even have the financial ability to do it. So that's a very important, crucial role you are doing. அது கொஞ்சம் எப்பவுமே அதை மைண்ட்ல வச்சுட்டு பண்ணுங்க. இந்த சப்ஜெக்ட் ரொம்ப இன்ட்ரெஸ்டிங்காக தெரியும், நல்லாவும் தெரியும், மார்க் வாங்கும் நமக்கு சந்தோஷமா இருக்கும் ஆக்சுவலி. ஸோ அந்த கனெக்ட் அதான் பிரில்லியண்டா இருக்கும். 187 நீ டாக்ஸ் ஆடிட் ரிப்போர்ட்ல கொடுத்துட்டேன்னா 184 says copy of the revised partnership is a big win. If you don't give, 185 will apply. What is 185 saying? Interest remuneration will be disallowed. அறியாமே ஒரு பெரிய கான்சிக்வன்ஸ் ஆகும். That is what is very interesting about it. So what if you satisfy, what if you don't satisfy is the next point we have to discuss. Plus one more point which has to be discussed is death of the partner. Will it be considered as a change in constitution? And second point, what is the impact of the change in constitution? If the change in constitution are the actually, what is use? What is the implications? If you satisfy section 187, if you come within 187, then assessment will be only one assessment for that year. And that assessment will be made in the hands of the firm constituted at the time of making the assessment. The real advantage of 187 is that there will be only one assessment only. Now, if you don't satisfy section 187, then for the same assessment year, multiple assessments will have to be made. That means I have to make two assessments if I don't satisfy 187. So very, very crucial consequence. For example, ABC are partners. XYZ admitted, ABC retired. One of the conditions to come out of 187 is at least one partner should continue post the change. None of the partners before the change are there. So what is the effect? I don't satisfy 187. Now, since I'm not going to satisfy 187, this will be the section will come 188. There will be two assessments will be made for the same year. Succession of one firm by another, section 188. If it is not covered by 187, if I'm not going to come out of 187, ABC partnership firm will undergo two assessments for the same year, which will have a huge ramifications. Separate assessments will be made in the hands of the firm till the date of succession in the hands of the predecessor firm. Date of succession to the end of the previous year in the hands of successor. What is most important is the partnership firm does not even know this. ஏன்னா ஒரு 3 பார்ட்னர் உள்ள வந்துட்டா 3 பார்ட்னர் வெளில போயிட்டாங்க. அவங்கள பொறுத்த வரைக்கும் firm continues. But what is income tax act saying? உங்களதுல யாரான ஒரு பார்ட்னர் கண்டினியூ பண்ணாங்களா? இல்ல. அப்போ 187 not satisfied. சரி 187 satisfy ஆகுதா என்ன இருக்கும்? ஒரே அசெஸ்மென்ட் தான். 187 satisfy ஆகலனா என்ன இருக்கும்? I have to do 2 assessments. So how 2 assessments are going to be made? In the admission retirement deed என்னைக்கு பாஸ் ஆயிருக்கு? Let's assume 30th September. 30th September வரைக்கும் AB and Co will be assessed with the old partners. Other AB and Co for the last 6 months will be assessed separately as a new entity with XYZ as a partners. பெரிய கான்சிக்வன்ஸ் அவங்களுக்கே தெரியாத கான்சிக்வன்ஸ். சின்ன ஃபார்முக்கு இது ஒரு 4-5 வருஷம் கழிச்சு இம்பாக்ட் இருந்தா இன்ட்ரெஸ்ட் 234B போட்டு அவங்களுடைய இதுவே பயங்கர கான்சிக்வன்ஸ் ஆகும். ஸோ இதெல்லாம் வெரி இன்ட்ரெஸ்டிங் இம்பார்ட்டன்ட் ப்ரொவிஷன்ஸ் ஃபார் அ செட் ஆஃப் பீப்புள் who depend only on us for the tax compliance. So அதனுடைய இம்பார்ட்டன்ஸ் மட்டும் நான் சொல்ல வேண்டியது என்னுடைய ரெஸ்பான்சிபிலிட்டி நான் சொல்லிட்டேன் உங்களுக்கு ஆக்சுவலாக. ஸோ தென் இஸ் யுவர் சாய்ஸ். ஸோ லாஸ்ட் பாயிண்ட் நம்ம இதில் பார்த்தோம்னா இஷ்யூஸ் இஸ் டெத் ஆஃப் தி பார்ட்னர் பி கன்சிடர்ட் அஸ் எ சேஞ்ச் இன் தி கான்ஸ்டிடியூஷன். இந்த ஒரு ப்ரீவியஸ் பாயிண்ட் 184 பார்க்கும்போது இந்த பாயிண்ட் ரெஃபர் பண்ண ஸ்பெசிஃபிக்காக நம்ம டிஸ்கஸ் பண்ணோம். வாட் இஸ் 187 சேயிங்? If one or more partners continue, then 187 conditions are satisfied. No problem at all. 187 பொறுத்தவரைக்கும் very simple. At least one partner before the change should remain. இப்போ 3 பார்ட்னர் இருக்காங்க ABC. A dies. Whether this will be considered as 187 or not, other issue. Matter went up to the Supreme Court. Supreme Court made a very interesting observation. Section 42 of the Indian Partnership Act says, unless இப்போ நம்ம எல்லாருமே அந்த பார்ட்னர்ஷிப் டீட் எல்லாம் டிராஃப்ட் பண்ணிங்கன்னா ஒரு பாயிண்ட் கொடுத்துரும். லாஸ்ட் லைன், except as given in the preceding paragraphs, the provisions of Indian Partnership Act will apply. கொடுக்கறனால அந்த ஃபேக்ட். ஸோ அப்போ உன்னோட டீட் சைலண்டா இருக்கு. வாட் will happen in the event of death of the partner? Deed is silent. Deed is silent இருந்தா என்ன ஆகும்? The provisions of Partnership Act will apply. What is Partnership Act saying? Section 42. If the partner dies, then the firm will be automatically dissolved if there is no provision in the deed for continuation of the firm by the remaining partners. So, without the knowledge of the firm, if you have not taken care while drafting a partnership deed to specifically provide for continuing the firm, in an unfortunate event of one of the partner dying, firm dissolved. நம்ம இதை ஆன்டிசிபேட்டே பண்ணவும் மாட்டோம் ஆக்சுவலாக. அதனால தான் பார்ட்னர்ஷிப் டிராஃப்ட் பண்ணால் ஒரு கிளாஸ் இருக்கணும். த ரிமைனிங் பார்ட்னர்ஸ் கேன் கண்டினியூ. 2-3 கிளாஸ் நாங்கள் எப்பவுமே மேண்டட்ரியாக பார்த்து பண்ணுவோம். ரிமைனிங் பார்ட்னர்ஸ் கேன் கண்டினியூ. நோ பார்ட்னர் ஷால் பி என்டைட்டில்ட் டு குட்வில். இல்லைன்னா அந்த அவுட் கோயிங் பார்ட்னர் தகராறு பண்ணிட்டே இருப்பான். எனக்கு குட்வில் கொடு, அவன் பண்ணனா கூட அவன் பையன் தான் தகராறு பண்ணிட்டு இருப்பான். ஸோ therefore பார்ட்னர்ஷிப் டிராஃப்ட் பண்ணும்போது few points near about the death of the partner will not impact the firm. Similarly, none of the outgoing partners will be entitled to goodwill, so that the firm can run smoothly. So very crucial point. So if the deed provides for continuation by the remaining partners with or without the legal representative of the deceased partner, then that will be viewed as a change in the constitution of the firm. So அப்போ டெத் வந்து சேஞ்ச் இன் கான்ஸ்டிடியூஷன்லயும் வரலாம், சேஞ்ச் இல்லையும் வரலாம். எப்போ சேஞ்ச் இன் கான்ஸ்டிடியூஷன் வரும்னா deed provides for continuation by the remaining partners. இது இருந்ததுன்னா 187 be satisfied. இது இல்லைன்னா Partnership Act will apply, and when the Partnership Act says the firm will be considered as dissolved. Unfortunately தெரியாம என்ன பண்ணுவாங்கன்னா remaining partners will continue. அவன் ஒரே ஃபார்மா தான் கண்டினியூ பண்ணிருப்பான். அப்போ என்ன ஆகும்? That's what 188 comes into picture. Success, it will be viewed as a succession of one firm by another. அவங்க ஒருத்தர் பாரு 3 பார்ட்னர் இருக்கா, ஒரு பார்ட்னர் சேர்த்துப்படா, ரிமைனிங் பார்ட்னர் கண்டினியூ பண்றாங்க. ஃபார்மை பொறுத்த வரைக்கும் அதே ஃபார்ம் தான். ஆனா இன்கம் டாக்ஸ் ஆக்ட் என்ன சொல்றது? நீ டீட்ல ப்ரொவைட் பண்ணல கண்டினியூவேஷன் ஆஃப் ஃபார்ம். அதனால நான் என்ன பண்ணுவேன்? உங்க 2 ஃபார்மையும் டிஃபரெண்ட் ஃபார்மா எடுப்பேன். அப் டு த டேட் ஆஃப் டெத் ஆஃப் தி பார்ட்னர் ப்ரீசீடிங் ஃபார்ம் ஃப்ரம் தட் நியூ ஃபார்ம். அதே ஃபார்ம் நேம் எல்லாரையும் தான் இருக்கும். But Income Tax Act will view it as a separate assessment. For 187 satisfy one assessment. 187 if it's not satisfied, there will be two assessments will have to make very serious consequences. அதனால இதெல்லாம் ரொம்ப இம்பார்ட்டன்ட் ப்ரொவிஷன்ஸ். ரெண்டு செக்ஷன் பார்த்துரும், அதுக்கப்புறம் ஒரு சின்ன பிரேக் எடுத்துப்போம். ஜாயிண்ட் அண்ட் செவரல் லியபிலிட்டி தி பார்ட்னர்ஸ் 188. ஸோ இப்போ 184 பார்த்தோம். 184 is basically deals with condition to be satisfied. 185 deals with what will happen if you don't satisfy the conditions. 187 deals with what is a change in the constitution of the firm, because in 184 if there is a change in the constitution of the firm, a revised partner statement must be submitted. So 187 talks about circumstances in which the firm will be considered as a change in the constitution. Here the section very clearly says one partner before the change must continue. In continuation of that, we'll discuss what will happen in the case of a death. Death பொறுத்த வரைக்கும், if the deed provides for continuation, it will be taken as 187. If the deed is silent, then it will be considered as a dissolution. 188 will apply. Two assessments you have to make. So in continuation of next point, joint and several liability of the partners 188. Who are liable? Every person who was partner at any time during the previous year. Anytime. Or null partner 188 will apply. So if a person is a partner for one day, first April partner, second April, the original partner on the previous year, you will be liable. And legal representative of the deceased partner. So these are the persons who are liable. So what is the liability? Any sum payable by way of tax, interest, penalty, or any other sum payable for the relevant previous year. So இப்போ நான் previous year 19 ஒரு நாள் பார்ட்னர் இருந்தா கூட 1920 tax liability எங்கிட்ட இருந்துமே ரெக்கவர் பண்ணலாம். I will be liable with any other person. The section uses the word joint and several liability. The last of the section in this discussion, then we'll take a small break at the door. So 189 deals with how to proceed after the dissolution of the firm. If the firm has been dissolved or discontinued, the assessing officer shall make an assessment of the total income of the firm as if no such discontinuance or dissolution takes place. So the firm dissolved. So 31st March, firm dissolved. 31st March 2020. Return for this assessment here, I had to file by 31st of July. For 31st July, யார் ஃபைல் பண்றது? ஃபார்மே கிடையாதே. Yeah, form 31st March dissolve பண்ணோம். 31st July வரைக்கும் ரிட்டர்ன் ஃபைலிங் டேட் இருக்கு. 31st March வரைக்கும் form is taxable. இப்போ 31st July யார் ரிட்டர்ன் ஃபைல் பண்றது? அதனால தான் செக்ஷன் சொல்றோம். If the firm has been dissolved or discontinued, AO shall make an assessment of the total income of the firm as if no such discontinuance or dissolution had taken place. That means the firm will be deemed to be in existence for the purpose of assessment. All the provisions of the act shall apply for such assessment. All provisions 143, 147, all section apply. Can penalty be imposed? AO impose pannalam. First appeal authority, C8 appeals can also impose penalty. Penalty for what? Non-filing of return or non-compliance of notice. எல்லாத்துக்குமே penalty impose பண்ண முடியும். You cannot shelter on the point. Firm dissolve ஆயிடுச்சு. See, penaltyன்றது assessmentனால தான் வர முடியும் இல்லையா? Dissolve ஆன firmக்கு penalty impose பண்ண முடியாது ஒரு question வரும். Firmே இல்ல penalty impose பண்றதுக்கு எப்படி போனா section அதான் second point and third point வரும். All provisions of the act will apply. Penalty can also be imposed. First point part, we will assume as if the firm continues for the purpose of penalty, assessment, everything. Right. What is the joint and liable liability? Every person was partner, like 188A. Every person was partner at any time during the previous year, and the legal representative, the deceased partner. So they will be liable. So dissolution is on account of death. Now legal representative liable. All other partners also liable. So what if for the earlier assessment years, assessment procedure is pending? Next section says you can continue the proceedings against the persons mentioned in point number 4. Here all partners and deceased partner or legal has. Even the proceedings can be continued. So ஒரே ஒரு question மட்டும் தான் important. Normal income tax act legal representative is liable only to the extent of the estate of the deceased. His liability is not personal. Estate of the deceased வரைக்கும் தான் liable. So அப்போ ஒரே ஒரு question இப்போ arise ஆகும். என்ன அந்த question arise ஆகும்னா whether 189(4) extends the liability beyond the estate of the deceased or whether legal representative is personally liable. Answer subsection 6 கொடுத்துட்டோம். legal representative, the deceased partner, is not personal liable. That means the liability of the legal representative is restricted to the estate of the deceased. So, 189 simply it only says up to the date of dissolution of the firm, assessment can be continued in the hands of the firm. All proceedings can be continued. Penalty can be imposed. All persons who are partners and the legal representatives partner, all of them are jointly, personally liable. And legal representative liability is restricted to the estate of the deceased. ஒரே ஒரு கொஷின் எக்ஸாம் பாயிண்ட் ஆஃப் வியூ இருந்து பார்த்தோம்னா இந்த ஃபர்ம் அசஸ்மெண்ட்டை யார்கிட்ட இருந்து டேக்ஸ்லாம் ரெக்கவர் பண்ணலாம், அது பாயிண்ட் நம்பர் 4ல இருக்கு புல்லட் பாயிண்ட். எவ்ரி பர்சன் வாஸ் அ பார்ட்னர் and legal representative அவங்க கிட்ட jointly and several recover பண்ணணும். And one other question is on first point, first bullet point, which is 189.1. If the firm has been dissolved or discontinued, AO shall make an assessment of the total to the firm as if no such discontinuance or dissolution are taken place. Subsection 1 scope என்ன ஒரு ப்ராப்ளம்ல கேட்கிறோம். ஆக்சுவலா firm 31st March அன்னைக்கு க்ளோஸ் ஆயிடுது. firm is following cash sum of accounting. 31st March சில பண்ண சர்வீசஸோட இன்கம் கேஷ் பேசிஸ் ஃபாலோ பண்றதுனால நாட் ரிசீவ்ட் அட் 31st March. ஸோ பார்ட்னர்ஸ்லாம் என்ன சொல்றாங்கன்னா each one of us will take one debtor எடுத்துட்டு போடும். Now at the receipt AO wants to tax the firm. First line சொல்றாரு, if the firm has been dissolved or discontinued, AO shall make an assessment of the total income as if no such discontinuance or dissolution. ஸோ முக்கியமான நீ பார்த்தா திருப்பி பிடிச்சி பார்த்தோன்னா அதுதான் இன்கம் டேக்ஸ்ல சம் இன்ட்ரெஸ்டிங் பாயிண்ட். படிக்க படிக்க டிஃப்ரெண்ட் வந்துட்டே இருக்கும். 189 பார்த்தா செகண்ட் பாயிண்ட் ஆஃப் லைன் பார்த்தோன்னா, if the firm has been dissolved or discontinued, the AO shall make an assessment of the total income of the firm as if no such discontinued dissolution had taken place. The scope of 189.1 is only for assessment and it is not for arriving at the income of the firm. Firm 31st March 2020 dissolve ஆடுதுன்னா 31st March 2020 அப்புறம் firm assess பண்ண முடியாது. Up to the date of the firm existence, firm assess பண்றதுக்கு தான் 189.1. That means scope of 189.1 is only for assessment and not for the purpose of taxing the firm. Firm exist ஆன இருக்கிற பீரியட் அசஸ்மெண்ட் பண்றதுக்கு தான் 189.1 தவிர 181 cannot extend the scope of taxability. Firm 31st March 2020 dissolve ஆயிடுச்சுன்னா previous year 1920 தான் firm ஓட லாஸ்ட் அசஸ்மெண்ட். 1920க்கு அப்புறம் previous year firm அசஸே பண்ண முடியாது. 31st March 2020 dissolve ஆயிடுச்சுன்னா அதுக்கப்புறம் எப்படி அசஸ் பண்றது? அப்போ what is the scope of 189.1? 189.1 ஓட ஸ்கோப் வந்து only for assessment when the firm existed. 189.1 cannot change the basic fabric of taxation. ஸோ அதுதான் இந்த இதோட இது ஆக்சுவலாக. ஸோ நம்ம அதுக்கப்புறம் இந்த சப்சிக்வெண்ட்டாக நம்ம இன்னைக்கு இதில் வந்து வில் ஜஸ்ட் லுக் அட் இன்ட்ரெஸ்ட் அந்த மாதிரி சில ப்ரொவிஷன்ஸ்லாம் நம்ம பார்க்கணும். ஆக்சுவலாக ஃபர்தர் வில் கண்டினியூ பார்ட்னர்ஷிப் ஃபார்ம். ஒரு 7:20 ஆயிடுச்சு ஆக்சுவலாக. கொஞ்சம் அப்படியே ஒரு லைட்டாக ஒரு டின்னர் முடிச்சு ஒரு 7:45க்கு வந்துட்டோம் நான். ஸோ 7:45 வில் கண்டினியூ.